Welcome to The Interest. I'm Ryan Kingsley. In today's segment of Master the Markets, Bill Bodnar offers his analysis on the latest economic indicators impacting mortgages. Also, our own Vincent, Valvo, and Andrew Berman bring the brawl of business to you in a new round of Cage Match. But before the news, I want to bring you inside a story about how mortgage regulators are struggling to balance fair lending enforcement with an increasingly complex fair lending environment. It's no secret that the CFPB and HUD have grown aggressive in their investigations of discriminatory lending practices since the Department of Justice announced a nationwide initiative to enforce fair lending in October 2021. However, in the wake of last June's Supreme Court decision, which effectively ended race-based decision-making in college admissions, fair lending and industry experts say mortgage regulators are blurring the lines between allegations of discriminatory lending and demands to lend on the basis of race, either in ignorance or defiance of the Supreme Court's June decision. Whether as a moral imperative or a strategic business decision, the majority of mortgage lenders want to increase racial diversity in their hiring and lending. But making race-based decisions has become a revolving risk, depending on who might file a discrimination lawsuit. Will it be one of a number of increasingly litigious anti-affirmative action groups citing contracting law from 1866? Or will it be the federal government, accusing non-bank lenders of redlining without strong evidence to prove it? The fundamental question is, can races be treated differently by private actors or the government when it comes to accessing jobs or loans in the lending industry? Experts say no, but they also say it hasn't really been tested in lending yet. Here's the story. Daniela Caceres is partner and head of the Mortgage Regulatory Practice Group at Mitchell Sandler, a women-managed, majority women-owned law firm serving the financial services industry. As regulators grow more aggressive when it comes to allegations of redlining,
I think it's particularly problematic for independent mortgage companies who have never been told through any sort of regulation that they have to focus on, a particular area based on race or ethnicity.
Caceres also expects to see more of these lawsuits against banks and non-banks.
I'm seeing an uptick in referrals to the Department of Justice, just in the community of lenders that I service. And I do not see them backing down, even in light of the Townstone case and the Supreme Court decision. I think it's yet to be tested in lending. I don't think that the agencies necessarily see it as an impediment at this point.
A fundamental issue is how regulators like the CFPB are building their redlining cases.
I have not seen very many investigations that I've worked on where there is evidence that the lender is intentionally avoiding lending to a particular group of people or in a particular neighborhood. So I've been a part of very few investigations where I have actually seen the documentation prove intentional redlining.
Instead,
there is, in the settlements, a lot of circumstantial evidence about, the political views or potentially personal views of the individuals that are involved in sometimes loan origination, sometimes not even really dealing with borrowers.
Dan Mornoff, executive director of the American Civil Rights Project, a public interest legal group that advocates for limited government, says,
there are a whole lot of federal programs which treat races differently. And those are at very least problematic and subject to questioning, and probably more clearly subject to questioning now than they were, a year ago, precisely because of Harvard.
Joshua Thompson, director of equality and opportunity litigation at the Pacific Legal Foundation, a public interest legal organization that exclusively sues the government, says the government may have to defend their own race-based programs.
What I see with many of these broader government programs is they aren't designed to remedy any particular instances of discrimination. They are designed to remedy disparities in lending practices or general societal discrimination that they view as more historical.
These programs are a lifeline to mortgage credit for many underserved communities. But
I don't think that those types of programs, if that is the sort of basis that the government is justifying race-based programs on, will survive.
read more about how regulators risk litigation over fair lending enforcement with lenders caught in the middle at nationalmortgageprofessional.com. For The Interest, I'm Ryan Kingsley.
We all dream of owning a home, but for too long, if you didn't fit the mold, you were stuck. Stuck because the system worked for everyone except you. We've changed that. Angel AI uses advanced AI technology to give a 100% trusted solution and fast answers for worry-free financing, allowing you to achieve fair and equal access to lending. Angel AI. AI you can bank on.
Hey everyone, thanks for tuning in to our Master of the Market segment. So last week was Fed week, and we learned a few things. Number one, the Fed sees inflation coming in higher than expected, sees U.S. growth coming in higher than expected. They see unemployment coming in lower than expected. But despite all of this news, they also see 3 rate cuts coming this year. So obviously, the financial markets like that. Stocks are going crazy. The bond market has improved modestly since then. But now we got to get to the data, right? And the chance of a Fed rate cut in June did go up a bunch. It's now close to 75% chance. So the markets feel like the June rate cut is in, but it's quite a head scratcher because if you look at all of these economic conditions, strong growth, low unemployment, higher inflation, why are we cutting rates in June? So expect more volatility ahead, and that's going to start this week because all those Fed members are going to be out there. Are they going to back away from some of what the Fed said, or are they going to kind of amplify that the cuts are coming? Hope this finds you well. Have a great week. Bye for now.
So, Vince, I want to talk to you about the idea of MLOs becoming real estate agents and real estate agents becoming MLOs so they can do both. What are your feelings about this?
I think it's brilliant.
Brilliant.
I don't have any problem.
We automatically know that that's going to be it's a bad idea. If Vince thinks it's brilliant, like trigger leads.
Right. Okay.
No, please. Let's hear you impart your wisdom about why it's a good idea to
look. We know for years the rules were you couldn't do both, and then
for FHA
they changed under FHA. I think last year or early last year, and I don't see really any problem with this. I think the biggest issue is just have you disclosed to the buyer that, or the client,
sure,
that you are both. If you are, why is that an issue? The only issue really is going to be is the buyer thinking they have to use you in order to get the mortgage, to get a house, or to use you as the agent in order to get the mortgage. As long as that's not tied together and it's clear, then I don't see any problem with that. What would there be?
So, and I think what you're saying in theory, it's, I think some buyers could potentially feel somewhat pressured because you're right here, you're trying to get this home and they bring to you the paperwork for your mortgage. There's some pressure there, but let's just put aside actually that, what about stay in your lane? Like be focused on
stay in your lane.
Because be good at what you're going to be good at. Be 100%.
Oh, Andrew,
at one thing.
So what you're saying here is that everybody who thinks they can be both is going to be terrible at being both.
I didn't
terrible,
say that. Whoa,
good at one, terrible at another.
Listen, went to extremes.
I'm not saying that every single agent and MLO ought to be both in a transaction. You asked me what about ones who want to be both. If they want to be both, if they can do it both well, and they're willing to make sure that there are consumer safeguards in there, then I don't see any problem.
Are you going to do business with one of these dual agents? If you're,
I don't know. I'm not in the market for a house right now.
If you were,
if I were, I might. You know why? Because we've already had dual agency. The real estate agents have been doing this for years, where they represent both sellers and buyers, and they acknowledge it right up front.
That's worked out great, right?
I don't think it's worked out poorly. It's certainly not as poorly as it could. I don't think there's really an issue here. And you've got an example that's working. I would say if I was an LO, I wouldn't like the way it's working, but home builders who are selling their own homes and, of course, doing the financing for it. They are showing a path for how to do this.
I'm talking about the individual originators.
So what? It's all basically along the same lines. The same issues that are there, whether the company is arranging for it or whether it's the individual arranging for it. I don't think that there's a problem here.
I understand, but I guess, you know something? To your point, why deal with the best? Why don't you deal with someone who's pretty good over here and pretty good over here? You have that option. I'm going to go for, I want the best real estate agent and I want the best mortgage person.
Hey,
when I'm going to sell,
I didn't say you should be obligated to use them if they present themselves as both. I didn't say that. And if you want the best and you don't think the person you're dealing with is the best, then go ahead and go find who you want. The question becomes, most people, you know what they want? They want the convenience. Can you get that done for me? That's perfect. Wonderful. That's why we'll go to a real estate agent. That's why a real estate agent will look at them and say, you can shop around for your mortgage if you're not qualified for this thing already. But if you'd like, I have 3 or 4 people that I deal with, or I have 1 or 2 people, often what happens, that I deal with all the time. I can put you in touch with them if you want. That happens all the time.
Our business is pretty complicated. And especially, listen, if you are... I'm
not saying it's not. You're not suggesting the real estate agent is doing this without having gotten themselves an LO license. They're going to know what they're doing.
Having an LO license,
and if they're if they're not taught how to do this at it, they will fail out of here. But you can't use that as the overarching. Shouldn't they do it? I want a dedicated originator. A dedicated originator. Then you can go ahead and get one.
And that's who I'm going to recommend.
You're free to go ahead and get whoever you want. But that doesn't mean you should preclude other people from saying that they could do both if they're able to do both.
I never said
and let the consumer
I think it's
do
a bad
this.
idea.
I'm sure you do think it's a bad idea.
I think it's a bad idea.
I'm not suggesting it's necessarily a good idea.
Families go to these dual agents that are okay real estate agents, okay mortgage people, and I'm going to send my family, my friends, my people.
Hey, you got an awful lot. You've got an awful lot of LOs out there right now that are doing business with one wholesaler. Right? And they're in that wholesaler's technology environment. Guess what? A realtor who's become an LO can be in that same thing and be just as effective. So that argument is kind of silly. I'm not saying that there aren't best wholesalers out there.
Defending with that model?
I don't think there are. I don't think that there are LOs that are out there that are fantastic. That are fantastic. I'm not saying it's a great model, but I'm saying it's what we've got out there. And a consumer is going to wind up. A lot of consumers are going to wind up with LOs that are there. Why can't that person also be the real estate agent? I don't see the conflict as long as everything is disclosed. You just want to get in there. You're like a big government advocate is what you are. You want to keep these things.
I didn't say regulations.
Things apart. You want to keep them
different.
Different.
Regulations.
I'm not for that. I'm saying let the consumer make their own determination. My personal opinion might not be that I would do both. I might want different people. I don't know. It depends on the person in front of me. If I know them.
This is the guy who believes trigger leads are empowerment of consumers. Okay?
I will take you on in another one of our episodes.
It is on.
I will kick your butt all over this studio.
Valvo,
you
got it. Oh yes,
you're done.
Bring it.
Done for. That's what you are.
Bring it.
For more on these and all of today's top stories, go to nationalmortgageprofessional.com.